This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. It was a relatively quiet trade there in the live cattle market. We're looking at key technical resistance 127.80 and key technical support 123.70 to 124.30. Representing a key retracements as well as the 50 and 100-day moving average. We're not looking for a whole lot outside of those ranges. So we've had the bulls in control over the past couple months, but expecting things to tighten up and become more range bound with the steady cash trade that we've seen here over the past couple of weeks. Now, moving over to the feeder cattle side of things, we've had a great run here over the past two sessions, rallying off of that support near 141, 142, and taking us up towards key significant resistance 144.35 to 144.65, which represents the 50-day moving average, as well as the 50% retracement, or basically the middle of the range from the contract lows back in May to the contract highs in October. If you've been long this market, this is certainly an opportunity to reduce risk, and if you're wanting to look at the short side from a specs perspective, or a hedge perspective, this is a good opportunity, I think, to dip the toes in. So that's what we're looking at for cattle. Wrapping things up with the lean hog market, it has been a technical graveyard over the past several months, and we're kind of at the last line of defense, going all the way back to August 15th, 63.10. There is a gap that still has not been filled. If we're able to close that and hold that gap, potentially we start to see some short covering, but again, this is a very distant silver lining. The bulls need to see some sort of momentum, and we quite frankly would rather be buyers on strength than trying to pick a bottom here in the very near term. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.